We are live. Hey guys, welcome to the channel. And today's real estate update for the Denver metro market. This is going to be, from my perspective, one of the best real estate updates I've potentially ever done. One of the best you might be privy to. And it's really, really, really important information. The report we're going to go through today, it has some radical truth and touches on some very touchy points. If I'm being realistic, you guys might not like what you are hearing, but it is the truth of what's happening in today's market. So be sure to stay tuned. And I just want to encourage you guys, if you are new to the channel, make sure to subscribe, because it's likely you're going to watch this update and in 2 to 3 to 4 to 6 to 12 months say, oh my gosh, everything in here was spot on. And it's likely you're not ready to make a move right now. Maybe you're not going to make a move, but I just want to make sure that when your time comes, you can find this channel, because you're going to see within the level of depth that we go in these market updates, it's really going to allow you to be set up for success in today's market. Now, today's report that we're going to go over is written in a way that's very, very, very applicable, more specifically to sellers, but buyers, read between the lines, because everything we're going over here today in this report, what's working for or against sellers will be the opposite for you. So it's a very insightful market update. This is somewhat timely, but it's also a market update that if you're catching this 3 months from now, like, it's going to be very, very relevant. Guys, this stuff is kind of groundbreaking in the sense that I don't know that I've heard many people talking about it, and it's something you absolutely need to know about the real estate market today. So let's go through the report. I'm going to read it. It's really insightful information, guys, and then I'll give you some of my thoughts as we're going through this. If you guys have questions, jump on, leave a comment. I can see them, and love nothing more to chat with you guys. And last but not least, my number is down below. If you guys are like actually selling or buying or wanting to in this market, whether it's now or 12 months from now, I'm your guy. I've been licensed here in Colorado for the last 10 plus years with Colorado Home Realty, and excited to serve you guys. Now, without further ado, let's dive into this. So 2025 Denver Real Estate Market Report, strategic insight for sellers and agents. Give it up for my brokerage that I'm with, Colorado Home Realty. They do this kind of stuff. And guys, this is what will set an agent apart, a high-level professional apart from maybe not a high-level professional, because we're privy to this type of information in a way that we can articulate it to a client and help you guys make smart decisions. So, executive summary: market at a turning point. The Denver real estate market in May 2025 is undergoing a significant transformation characterized by a negative price curve driven by a substantial increase in inventory and a seasonal cooling of buyer demand. As of early May, there are 11,556 active homes on the market, a figure projected to rise over 18,000 by early October based on historical trends. Price reductions are accelerating, with 35.9% of active listings having reduced their price, the highest percentage for April since 2012. Guys, let's reread that again. Price reductions for listings are happening more and more often in today's market. It's actually happening at the highest percentage for April since 2012, over 10 years ago. Absolutely something we need to be keeping our eyes on. 29.3% of homes sold above their asking price, a sharp decline from previous years and the lowest since 2013. Average price per square foot is dropping, days on market are climbing, and appraisers are increasingly cautious, acting as a governor on price. This report is a comprehensive analysis of the current market conditions designed to empower sellers with the data and insights needed to make informed decisions. The stakes are high, hundreds of millions of dollars in potential seller equity hinge on the choices made today. This is not a time for wishful thinking or emotional attachment to unrealistic prices. It's a time for radical truths, to strategic preparation, and proactive adjustments. Sellers must decide whether to get ahead of the market downward trajectory. The data is clear, the trends are unmistakable, and the time to act is now. Ooh, we're just getting started, guys. Introduction: the market doesn't bend to your expectations. This is a super beneficial one. Let's get into it. This is more so for you sellers. If you're not a seller in today's market or don't plan to be anytime soon. Skip this to the next paragraph. But let's go through it. Selling a home is one of the most emotional transactions you'll ever undertake. It's not about just building. It's not just a building. It's where you've built memories, raised a family, started a new chapter. But the moment you decide to sell, it transforms into something else entirely, a product. And the product must compete in a marketplace that's indifferent to your personal history or financial goals. In May 2025, the Denver real estate market is sending a clear message, guys. A negative price curve is here, not coming, it's here, driven by an oversupply of homes and softening of buyer demand. This report doesn't sugarcoat the reality. Hint, I think I made that clear. It's a call to action for sellers and agents to face the market head on, armed with the data, strategy, and commitment to logic over emotion. The decisions you make in the coming weeks will determine whether you protect your equity or leave money on the table. Inventory is rising rapidly. The amount of homes, guys, that are for sale, it is really high relative to the past 5 to 10 years and is rising rapidly. With that, we're seeing price reductions becoming more the norm, and buyer hesitancy is growing. Yet, opportunities remain for those who act decisively. Hyperlocal variations mean that 45% of homes are still selling at or above their asking price, often with multiple offers due to the unique features like views or street appeal. But for the majority of the market is unforgiving. This report provides a detailed breakdown of the data, actionable strategies for pricing and adjusting, and critical questions to help sellers move from emotional attachment to empowered decision-making. Amid these challenges, there are also positive signs in the market. Interest rates have recently drifted downward, spurring increased buyer activity, while the rise in inventory fosters a healthier, more balanced market. Buyers are no longer moving at the frantic pace seen in years of recent. Year-to-date contract numbers reflect robust buyer demand. However, this report looks beyond the current moment to the one we can see approaching. By analyzing historical patterns and current conditions, we can predict likely outcomes, equipping sellers and agents to make the most informed decisions that safeguard their financial interests in the face of a shifting landscape. All right, guys, here we go. This is the data part of it. So this is really what's going to make sense of what's actually happening in the market, so you guys can get a sense and understanding of what's actually happening. That, from my perspective, not many people are talking about. Like, you're not getting this in many of the headlines. Maybe you've seen it here or there, but this is like boots on the ground, really, really insightful market information. So let's get into the moment you guys have been waiting for. All right, the emotional barriers to market clarity, anchoring to listing price. So again, most of this is for sellers. We're going to get into the data here, but as a buyer, what's going for and against sellers is likely the opposite for you. So this has very much applicability to your situation as well. So anchoring to listing price. When a home hits the market, the list price often becomes a psychological anchor for sellers. It's not just a number, it's a symbol of success, a benchmark for what you believe your home is worth. But here's the unfiltered truth. The market doesn't care about your list price. That number does not dictate value. The collective decisions of thousands of buyers do. Clinging to an unrealistic price creates friction, delays on your sell, and often leads to a lower net result as the market moves on without you. The list price should be a strategy, not a symbol. Sellers must be prepared to let go of this anchor and adjust to market feedback or risk being left behind in a softening market. Guys, the reality is, like, it really is the unfiltered truth. As much as even myself, guys, I've sold a home. I'm going to be selling a home. I know I'm going to want more than money than the market will probably give me. And it might suck for a second, but the reality is the market doesn't care what I think about what my home's worth or what I want for it. The market sets the price. It always does, always has, and always will. And so we just have to, you don't have to accept it. Just be aware of that's the fact. That's what's happening. So with that, the market doesn't care what a seller needs. It doesn't care if the equity is earmarked for boat, retirement, or another home. Your financial goals are valid, but the market isn't a negotiation partner. It reflects buyer sentiment, affordability, and competition, not your personal plans. If your desired proceeds don't align with what the market will bear, you're faced with a choice. Adjust your expectations or reconsider timing. The market's message is clear. It will pay what your home is worth, not what you need it to be worth. Accepting the reality is the first step toward a pleasant process and successful sell. All right, let's get into the data here. So inventory search. As of early May, Denver Metro has 11,000 So that's this line right here, guys. Let me make sure I had shared my screen again. Yep. That's that line right here. You can see this is 11,556 active homes in the market. Historical patterns from 2020 to 2024 show an average inventory growth of 62.4% from week 17 to weeks 36 and 41. So what we're doing is we're taking that 62.4% growth rate, and we're seeing that the projected inventory rate could be 18,000 homes by early October 2025. This is a significant increase, guys, a significant increase. The market was slow here. This was a big gap. That was like 13,000 homes. So imagine the gap we're going to see in 2025 if trends continue. Not great. When you have that much inventory outpacing buyer demands, this is the driving force behind negative price curves. More homes mean more competition, pickier buyers, and longer days on market. Sellers who wait to adjust their pricing strategy will be pricing into an even softer market with potentially thousands more competing listings. Price adjustments accelerating. As of early May, 35.9% of all active listings have reduced their asking price. The highest April percentage in 13 years. This isn't just a temporary blip. It's a market signal that pricing expectations are misaligned with buyers' willingness to pay, meaning there's a ton of listings out there that are pricing above what buyers are willing to pay. They're pricing higher than what the market says the house is worth. And so they're having to reduce price in order to meet the market where it is. Simultaneously, homes closing below original list price are beginning to show the seasonal shift. These signals are not minor fluctuations. They are confirmation of a strong seasonal pattern that arrived a little early this year. So some of this is seasonal, guys. Don't get me wrong. Let's not some of this is seasonal, 100%. But when you have inventory that is increasing at levels we haven't seen for 10 plus years, when you have price reductions happening at a rate that we haven't seen in 13 years, it's a much stronger seasonal shift than we've seen in a long time. And that's something that has to be paid attention to. Now, price per square foot, the hidden decline. The hidden decline. Headlines might claim that prices are holding steady, but the average price per square foot in 2025 has dropped significantly compared to previous years, even as larger homes dominate sales. While larger homes typically sell at a lower price per square foot, the current decline is more pronounced than expected, signaling broader downward pressure on prices. This metric is often overlooked by sellers and agents, but it's a critical factor. It's a critical indicator of market direction, and it's flashing a warning. The lagging indicator of a decline, the average sales price. When viewed in isolation, 2025 prices are holding near historical highs, but this is a misleading snapshot. A fuller picture emerges when factoring in the rising average sold square foot, the decline average price per square foot, and rapidly growing inventory. While historical patterns indicate a typical price decline between now and the end of year, current data points to a steeper drop than in previous years. Sales prices capture buyer sentiment from 30 to 40 days prior to close data. So the true impact of today's market dynamics is yet to fully materialize. If these trends persist, average sales price are poised to fall further through the summer, intensifying the pressure on sellers who postpone necessary adjustments. Meaning, guys, if you're in the market today and you postpone necessary adjustments like improving condition or price, that's what we mean when we say adjustments, because you've tested the market's responded, and that market response is telling you something about your listing. From that response, having a high-level professional will help you read it in a way that makes sense. Meaning, there is a way you can read that market response and not adjust soon enough. There is also a way that when you sell a home and the market responds to your listing, you might make an adjustment too soon. And so it's really, really important to have an agent who knows how to respond to the market, or shall I say, read the response to the market and then enact the best strategy and adjustment that's going to net you the most amount of money for the sale of your home. So that's what we mean there. Let's see. Okay, days on market and sales price, a slow burn. So we are already seeing anticipated early sign of increasing in days on market for 2025. Buyer demand typically peaks in mid-spring and begins to taper by late May or early June. Buyer activity could hold steady or even increase in late spring months with substantial decline in mortgage interest rates. Let's hope that happens, guys, for everyone's sake. But with inventory continuing to grow, days on market will likely climb further, leading to increased seller frustration. Longer days on market means more competition, more pressure to reduce price, and a higher risk of your home becoming stale in the eyes of buyers. So if we look at this, guys, we're already in 2025, longer days on market than we have in the past 5 years. The reason for that is inventory. We've just been at higher levels of inventory, similar to the market around week 25 to 30 here when inventory increased. I'll show you this graph up here. Where's my inventory? Right here. See, week 25 to 30, you see this big gap starting to occur in inventory. That's where days on market increased because there's just more competition. And so it's taking homes longer to sell. All right, guys, we're almost to the end here. So bear with me. We've got hyperlocal variations, the exception, not the rule. Despite the broader market downturn, approximately 45% of properties are selling at or above their asking price, some with multiple offers and quick sales. Reminder, these sales are from properties that went under contract in late March to early April, where inventory is lower and buyer demand was peaking. The hyperlocal phenomenon of quick sales and multiple offers is driven by unique property features like stunning views, exceptional street appeal, or desirable neighborhood amenities. And in some case, a lucky rabbit's foot or a four-leaf clover. One street might see a home sell in days, while another nearby languishes for weeks or months, unexplainably, even with comparable preparation. Meaning, similar house, similar preparation, similar updates, but one house sells in a couple of days, the other one takes months. I'm seeing it. I see it every day that I'm looking at the market. These exceptions underscore the nuanced nature of the market, but they don't change the overall trend. For most sellers, the market is softening and adjustments are necessary. The role of appraisers in a declining market, I'll summarize this, guys. It's just the appraisers are there to ensure they are appraising, assessing a value on the property that is actual and true to today's market value, of which they are going to consider the current market trends. And so we could run into issues with loans where appraisers are giving lower appraisal amounts for houses that are under contract. So something to be very, very cautious about. Dangers of blaming agent for market conditions. That one's simple. I'll give you guys a summary of that, and then we'll go to the conclusion. Simply put, the whole thing about agents and blaming them is, one, a lot of times that blame is well placed. If an agent's not doing their job, if they're not reading the market, if they're not doing the weekly work that they ought to, from my perspective, maybe you guys might disagree, but like one of the things we do is we do a Monday metric update, Monday metrics report, which is an update specifically for your home. We're looking at showing feedback, how the market is moving, both in your neighborhood, in your city, in the broader economics of the real estate market. And from there, we're able to advise you every single week of what's happening in the market and how that affects your listing. And so while some of that blame on agents of your house not selling in a certain period of time or for the amount of money that you're expecting might be well placed, the reality is the market's the market, guys. And if you don't prep your home exceptionally well, even if you do price at a number that you and your agent think are competitive, the market's going to dictate price. The home is only ever worth what a buyer will pay for it. And so if you're sitting on the market for a long time and you're not getting the price you want, guys, many times it's not your agent's fault. It's the market. But again, that's our job as an agent to articulate that, help you guys understand it so that you guys are set up for success in knowing the market. So with that conclusion, act now or risk falling behind. Let's get into this and I'll give you my ending thoughts and we'll end this. Denver real estate market in May 2025 is at a tipping point. Inventory is climbing, prices are softening, and buyer hesitancy is growing. The homes that sell this year will be those that are properly prepared, accurately priced, and backed by sellers who are willing to face the market's reality. Waiting for the market to bend to your expectations is not a strategy. It's a recipe for frustration and financial loss. You have a choice. Get ahead of the negative price curve by pricing competitively preparing your home to stand out and making adjustments based on the market reactions, or risk not selling at all. If you choose to wait, understand that the risks are inventory is projected to be over 18,000 homes by early October. And historical trends suggest a modest recovery at best in early 2026. For those buying a replacement home, there's a silver lining. Same market conditions that lower the sales price of your home also reduce the cost of your next purchase. This, guys, is your report. This report is your roadmap to navigating 2025 Denver real estate market with clarity and confidence. The data is clear, trends are undeniable, and stakes are high. Decide wisely and act now. All right, I'm a little tired of the report. I don't know if you guys are. Here's the reality, guys. Here's my conclusion. The market's shifting, and I just want you guys to be privy to what's actually happening, because I am likely going to be selling my property in July. I'm not happy about it, to be quite frank. I'm a little bit nervous. I'm curious and nervous about how we're going to be, how much we're going to be able to sell the house for, because I see what's coming. I see the trends. I see the inventory, and I've been preaching that I think this is going to be the first negative price curve we've seen in a long time. And so I have a house that we're looking to sell in July, and I'm a little nervous. I wish we could sell it now, but for various different factors, we can't. And so I'm right here in this market with you guys, and I'm not telling you guys this to scare or emotionally sway you. I'm just saying, guys, here's the facts. Here's what's actually happening, and here's what you can do about it to set you up for success. The reality is, a lot of times these market shifts happen. They're not communicated well, not articulated in a way that you guys can understand them and do something about them. And then because of that, you guys fall to the wayside of the market and end up selling your house for less. Okay. And so with this, again, the idea here is just, I want to give you guys truth of what's actually happening in the market, again, to set you guys up for success so that you know what to expect when you sell your home in today's market and landscape, because it is ever so changing. It is shifting, and this is important information that you need to know. So with that, guys, if there are any questions you guys have, you've got my information down below. Thank you for joining. I hope you have enjoyed the content here. And as a reminder, guys, I am a licensed agent, have been for the past 10 years here in the Denver metro market. Would love nothing more to support and serve you as a buyer, seller, or investor. If you guys have any questions for me, reach out, and we'll catch you on the next